And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from a lovely Westlake Village, California. Bright and crisp and beautiful out this morning. And yes, we had Cyber Monday. Yes, the S&P and ISM manufacturing numbers yesterday came out hotter than expected, seen on the economic calendar here. And that is what gave the dollar a bit of a boost yesterday, boosting off this level at 104. And we did not violate our pivot of 103.64. So the big question is for the dollar, bounce or not. And we kind of outlaid two different directions these markets can go. And yes, it has to do with what the dollar is going to do over the next few months. And so what are we going to talk about today? Not only Bitcoin price action, we're going to cover the dollar, gold, and the S&P and the NASDAQ, and then talk about how that can affect Bitcoin. I did want to cover one kind of major news story that just came out this morning, and I think it is the next major thing on the economic war front. And this is it. Breaking news. The Bank for International Settlements is warning that pension funds and other non-bank financial firms now have more than $80 trillion of hidden off-balance sheet dollar debt in the form of FX swaps. $80 trillion, so dwarfing the American debt. Just a drop in the bucket if you are a couple of pension funds in the UK and Japan. And so basically what they're saying is, look, if you are a pension fund in Japan and you're holding all these retirement account funds denominated in Japanese yen, and the yen is taking a moonshot down to the pits of hell, it looks like, really coming down hard. And same thing with the pound, right? So if you're holding all these pounds and yen, you have to have something to offset those losses. Typically, what is that going to be? 30-year, 2-year, and 10-year U.S. Treasury, so dollars. And so what happens when you bought a 2-year Treasury at 0.116%, and it goes up to 4%, a roughly 4,000% increase. Should have went long bonds on a leverage fund there over the last year, right? So since 2021, January 2021, so call it 2 years now, almost 2 years, interest rates have skyrocketed. So what happens when you hold bonds at almost 0% and interest rates go up? They take a loss. So you've got a lot of pension funds holding bonds at a loss. It's the same crisis, if you ask me, that just happened in the UK. And they're saying this is non-bank financial firms. So it's kind of like over-the-counter Bitcoin sales, if you know what that means. Needless to say, I thought you should be aware that this is kind of the next, piece of the puzzle, I would say, if we're going to have another black swan type of event. Additionally, Peter Brandt pointed out something we've been talking about on the US dollar. So this is the monthly consolidation as you break the range, right? The ultimate target, Brandt has 119. I think we said 120, 121, something like that. But when you break a big range, you come back and you retest it. And that is very, very typical for, what price action does across all markets. And here's where I wanted to kind of, bring our attention here on the weekly time frame. We are having a perfect kind of retest of the breakout. And I want to bring our attention back to the monthly. We've been going over this, and the monthly does have hidden bearish divergence, multiple drives going back all the way to this pivot right here. And what am I talking about? So from this pivot right here, you have, if we just draw a line, this is how I like to do it. A horizontal ray right here. And then you've got one higher high there. 1, 2, 3, 4, 5 drives. And, at a minimum, typically I'm looking for a drive down to that green 55, which is $98. And so here's frankly what I think probably happens. Could be totally wrong, but we did outline a couple of examples of what the dollar might do over the coming weeks as we bounce off this green 55 and we consolidate between the 1618 and the 100 on the fibs here. And basically we said this is, look, very likely to get a bounce off this green 55. If the dollar does bounce up to this level, 109.49, risk assets will take a hit. Very likely NASDAQ will, come back to the bottom side of the range. S&P, all rejecting at a pivotal point here. Could be a bearish engulfing almost. Any kind of a closure back in this trading range, very likely stock market comes back down to the bottom side of the range. And how's the Dow doing? Dow is potentially putting in that top and would be putting in an additional drive of hidden bearish divergence, which we'll call it 2 drives. 1, 2 gets you a shot down to the 21. And if we fall back into this channel, that's when I start to think this was just a bear market rally, which we've been discussing. And the dollar does play out a bit more of a bounce. Again, if Bitcoin or if the dollar pops up here to that one, here's the real line in the sand. If we can get above 110, that would line up for Bitcoin coming down to that 14.5 target. In my opinion, again, not financial advice. I'm not a financial advisor. On the other side of the fence, if the dollar loses this region at 103.65, then I would expect a greater bounce to play out. Minimum, probably 19 to 19.5, something like that. Something in that region, all the way up to the 21 is a potential, all the way up at $20,000. So if the dollar starts to lose value, Dixie, right? If it starts to lose this region, that'll be our, indicator that, might be a good idea to take a look at some longs. Vice versa. What is the market most likely to do is fake everybody out. And how would that happen? Well, you could see something like this where the dollar bounces, comes up there, rejects, and then comes down to the 98 and then picks itself back up for a bit of a rally to our higher targets, which ultimately I do think we will get there. We hit the first target at 114. And actually the second target now is all the way up at 128. So if we do start to clear 113 on a weekly time frame, 113.50 is specifically, then I will be looking for those targets to get initiated to the upside. And you can mediate that with kind of a daily here. And the daily, if we do put in a higher low than this low right here, multiple drives of hidden bullish divergence. And, I'd confirm that with the daily closure back above 106. I'm looking for a run up to the green 55 at a minimum at 108.40, which would put pressure on risk assets like NASDAQ and Bitcoin and Ethereum. And how would that affect gold if the dollar plays out a bounce in the short term? Well, gold may pull back a little bit. So gold kind of just popped back into its trading range along with silver. And when that does happen, it does give the bias that you may pop back to the top side of the range, coming in at, call it about 19,500. Weekly Stokes are flopping around here, and it will depend on the dollar, guys. That's, the dollar has an inverse correlation with gold specifically. Gold is denominated by the dollar on the world market. So when the dollar comes down, gold goes up. Vice versa, when the dollar goes up, typically gold goes down. As we've seen, gold has pulled back from 2,000 an ounce in March of 22 to 1622. And we do have a bias for this 1450 target to get hit. So I do imagine if gold does lose this region again at 1700, then we do make it down to that call it 1480 target, 1450, somewhere in that range. And then silver as well, kind of the same thing. Silver follows gold with more gains. Silver had a bit of a bounce here, up 28% in the last 63 days, so not bad. And yeah, if this one wants to make it back to the top side of the range, which, do we have any bearish divergence formulating? Yes, we do. If we confirm this as a local high on the daily time frame, you will have 1, 2, 3 drives, and I'd be looking for a move back to about $20.70. And this is all but confirmed, as we did take this prior wick out, and I would call this a bit of a top here. And that's where I would begin. Yeah, so we're going to have bearish divergence as long as we are below this pivot right here, and that's coming in at 25.90. So very likely that's going to be a major pivot right there, 25.90 for silver. And if that region does get taken out, then I'd be looking for the top side of the range at 29, almost 30 bucks. That's it for silver today. I feel like I did a light analysis on Bitcoin. We talked about it yesterday. I did such a good one in our morning meeting yesterday on the 4-hour time frame. This is all but confirmed for me, as there are multiple drives of hidden bearish divergence where price is making lower highs and the RSI is making higher highs. And to me, this, all mediated by a closure below 16.7. So on the 4-hour time frame at 16.7 to the upside and 16.700 to the downside and 17,330 to the upside. A 4-hour closure above or below these pivots is likely going to get the next short-term move. I do believe, again, the market likes to do, trick everybody, right? So, what could price action do from here? Bounce up here one more time, bounce below that pivot, bounce up back here, and then just slowly take out the wicks. So we'd take out that wick, put in a bounce, take out that wick, get everybody bullish again, and then one more time back to the bottom side of the range. The daily time frame is now crossed down officially. So that is a point for the bears. And how do we confirm this? Again, this pivot, 16,700 daily, daily 4-hour, 12-hour below there, likely going to get that next move to the bottom side of the range at 15.7-ish, 15.9 to 15.7, somewhere in that range. And I do think we're probably going to bounce from there first. Again, not financial advice, not a financial advisor. But mainly, I want to see open interest really start to tick up before the next major leg down. What else? Point for the bulls. So Darius Dale from 42 Macro, I really like his stuff. He was saying markets still digesting the tug of war between China relaxing COVID testing and the Fed tightening slower, but for longer. So when China fully reopens, it's important in the context of the U.S. recession risk, China can't bail us out. And I agree with what he said there, because if China reopens, it's a lot more spending, a lot more money in the economy, and a lot more inflation, and that would mean higher rates for longer. And I do think if we get a hot inflation print coming out on the 13th, there is a higher chance of a 75 basis point rate hike coming on the 14th. And a hawkish Fed, and not the Christmas rally we were hoping for. That's that. And did I want to wrap it up with anything else? I think that's it for today, guys. I hope you have a blessed and highly favored day. One other thing, 2-day volatility has reset. Momentum is to the upside. So if you do see volatility expansion here, I'd expect the price to go in the direction of the momentum. So if these do flip around, which, these will, this number will be rising on the next closure. We're at 17,000 right now. It's at 16,000. So it's not really close. The 3-day is crossed up. Volatility is contracting. 5-day momentum is still to the downside. And as long as the 5-day momentum is to the downside and we're below 17,500 on the 5-day, which will close today and will cross up today above 17,500. So if you do see that, that would be a very, very good indicator that the bounce up to 18, potentially 19,000 bucks is more likely to happen than not. So I'd be keeping a close eye on the 5-day today. And is CME giving away any hints here? Volatility is expanding and momentum is to the downside. CMEs will not close for another 2 days, it looks like. And yeah, what else is going on? Dogecoin taking a bit of a hit after a monstrous rally off the lows. I do still think Dogecoin is going to come back down to about 6 cents. Somewhere in that range over time. Chili's, another one that did get beat up pretty good from the highs, and it's going to do whatever Bitcoin does, but more. And Ethereum, yeah, ultimately did come down to that target of 1,080 bucks. We had, I think called out from this high right here and got a significant bounce. Momentum is still to the downside. Volatility is increasing, will remain down as long as we are below 1,323. All right, that's it for today. Have a blessed day. Take care.